Hey, what's up you guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to show you some cool setups that happened during New York session on 2 to 3 different pairs, and I want to start with NAS 100 to show you exactly what that setup looked like. So I'm not going to waste too much time, guys. As you know, I always start my videos with the results of Gold Incubator, but I'm going to show you how it did at the end of this video. But before I talk about something else, I want to actually start with NAS 100 with this beautiful setup that happened using smart money concepts trading strategy or high probability order blocks. So I'm going to do a little bit of replay for you to show you exactly what happened and what I noticed when I started looking at charts. So as you know, New York session starts at 8 in the morning Eastern Standard Time, and this is exactly when I start my trading session. And I start on a 5-minute time frame. I analyze the market to see how it looks like, the trend of the market, and if you have any high probability supply or demand zone, I identify it immediately. And then I go to 15-minute time frame to see how the market looks like. As you can see, we have a huge drop from here, and these are my previous analysis. Look at this. There is a huge gap right here, there is a huge gap right here, and none of them are filled in. So in this case, I'm personally a little bit careful about it because there is a high chance that the price just wants to immediately jump up and fill in these gaps right here. So I gotta be prepared about it. So, and also when I get back to 5-minute time frame, I could see this high probability supply zone here. So if you don't know what high probability supply and demand zones are, I highly recommend you to watch my other videos on my channel, but I'm gonna put a video above this video. If you click it after watching this video, you can watch that video in depth to see what they are, because I fully explain how you can identify them if you're a scalper, and if you trade on any time frame. This strategy can definitely help you out. So, and the reason is that I'm gonna just explain it briefly here, that how I could identify this zone as a high probability supply zone. So when you want to identify a high probability supply zone, you got to look for the last bullish candle, which in this case is this one right here. So when you cover the entire candle, you'll see that this is the first candle that dropped out of this zone. So, and then when you find this candle, you got to look for the next candle that forms after this one, which is this one right here, and then you will see if there is any gap between this candle right here that forms after this drop and this zone here, which there is a gap. There's a gap between this zone and this candle right here that makes this one a high probability supply zone. So when you backtest it yourself, when you watch my videos, you can definitely understand how it works, and it makes everything easier for you. So in this case, the only thing you need to wait for is a candle that tap into this zone, and then if it gives you a really good momentum, you can sell the market. And then as you can see, nothing really happened here, and then we had this high probability demand zone as well, just to let you know. But for high probability demand zone, you got to look for the last bearish candle, which is this one, and then this is the first candle that got out of this zone. So previously I said that you need to wait for the next candle that forms after this. If there's any gap between the candle after that and the zone, is a high probability demand zone, but the candle after that literally filled in the gap super quickly. It was a high probability demand zone, but since we have this doji candle exactly inside the zone, it still counts. And then you can take your buy position here. I personally don't do that because it's a bearish trend, and then I put my TP here. There's a chance that I get stopped out here, but because the trend of the market is bearish, but I didn't. See that it also could be a profitable trade if I wanted to do that. See how simple it is. I'm not using any indicator, nothing else. I'm just using pure price action with some zones, and that's all I'm doing. So I identified the last bearish candle. This is the first candle that got out of the zone. The next candle after that tapped into the zone really quickly, and then I put my buy stop here, my stop loss here, and then I can take my TP here. It's a beautiful one-to-one trade. And what happens after that, I just wait for better opportunities. You see, look at this one. It's a beautiful candle. So I'm going to delete this one and this one, and then you see that we have another high probability demand zone from here to here. Since we have 2 bearish candles back to back, I cover both of them together. See what I mean? in this case, we only have one bearish candle, and I have to cover the entire candle. But here we have two bearish candles back to back, and I cover both of them. So as you can see, this is the first candle that finally tapped into our high probability supply zone, and then I just need to wait for a better confirmation to sell the market. And as you can see, this is a really good one. I personally love this form of candles because they are really good confirmations that the price wants to go according to the trend, and in this case is a downtrend. So but there's a contradiction here. So if you want to put your sell stop below the previous candle and then your stop loss here, where do you want to put your TP? Because this is the closest the closest high probability demand zone that we have, and if I want to put it here, it doesn't even make sense. Like, I don't even have to do it because this candle is literally so close to the nearest high probability demand zone. So I need to put my TP at least right here to have my 1-to-1 risk to reward ratio trade. But since we have a downtrend market, then there's a higher chance that this high probability demand zone won't get respected because the price wants to go down further. And let's see what happens. Look at this. It literally smashed my TP. But if I wanted to wait for this one to see what happens, I would have seen this candle right here that actually got pushed towards downside by sellers. So it means that they are still not as strong, although they're all inside a high probability demand zone. Because look at this candle, guys. They're just getting pushed down by sellers. Multiple candles back to back, and they are all weaks. Look at this. They are all shadows, and it means that sellers are stronger and they're pushing the price towards downside. So in this case, I'm a winner. I'm trading according to the trend, and I could take my profit. So this is exactly what happened on NAS 100. But let me go to EURUSD to show you exactly what happened here. 13. Yes, this is exactly what happened. So there are two trades that I identified here, and I did this one on purpose to show you what would happen if you trade opposite the trend. So take a look at the EURUSD, guys. What do you see? Is it a downtrend market or an uptrend market? It's definitely a downtrend market. Even if you're a super newbie, you can identify the trend by looking at these lower lows and lower highs. Look at this, guys, that we have multiple breakout structure towards downside, and then we have this trend. So we have a high probability demand zone right here. Look at this candle here. Look at this candle here. We have a high probability demand zone here, and then we wait for the price to tap into this level, which is this one right here, and then you wait for a better one to give you a confirmation, and then you find this one, and then you say, okay, the zone is valid, and then I have this bullish engulfing candle. Let's get into the trade and get out of it right here. But as you can see, we get stopped out super fast without even smashing our TP. Whereas this one, which is another high probability supply zone, look at this. This is a high probability supply zone because these are the last two bullish candles before this drop, and then this drop happened. The next candle after that literally didn't tap into this level, so there's a gap between this candle and this zone right here, and this gap makes this zone a high probability supply zone. What would you do? We just wait for the first candle that tap into this level, which is this one, and then I wait for the next candle after that to see how it forms. So I personally put my sell stop below the previous candle, and then I put my stop loss above it, and then my TP somewhere around here. So as you can see, this is good. This could be a really good trade because I'm more confident since I'm trading according to the trend, and that's a way better idea. Even if you find a high probability demand zone or supply zone, and then you're trading the opposite the trend, I personally recommend you not to do that and just wait for a better one. So that was for EURUSD. This is a trade that happened on GBPJPY, and then I want to show you exactly what happened. This one was a really good one. Look at the trend, guys. On 5-minute time frame, you can definitely see that we have a downtrend market on GBPJPY, multiple breakout structures, lower lows and lower highs, and then we have this high probability supply zone here, and then you see that the next candle after that literally tapped into the zone super fast. And then, you can take your trade somewhere out here, even if you close it right here. Let me see if what would happen. Let's see, let's say that I want to put my stop loss here and then my TP somewhere around here. So I want to see what happens. So as you can see, guys, if I put my stop loss be above the previous candle, I get a stopped out. But what if I put it here, which I really have to do that, but I personally don't really do that because my risk to reward ratio is gonna decrease, and I don't really want to do that. So what I personally do, you know, I put it here, I get a stopped out, I re-enter the trade, there's no problem. But we have to put it above the zone, which is here. And then at the same time, I need to widen my TP. So let's see what happens. See, in this case, my TP smash, and then my stop loss is right here. It's way safer, and I'm also trading according to the trend. That's how it works, guys. I hope that you got some value from this video. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell, so next time when I upload a video, you'll get notified super fast. And before you go, let me show you the results of Gold EA Incubator on this $1,000 account that we have. And you know, we installed this account in March 7th. And the reason for this drop is that we manipulated some settings or some parameters inside the settings tab that caused this loss. But otherwise, we would have been up over 140% in profit. But in this case, unfortunately, it dropped to 40%. And then we've been able to gain over 35% profit since May 17th all the way to June 14th, which is almost 36%, from 40% to 76%, and we are still in profit. So if you have any question regarding the EA and you would like to get more information or whatever it is, don't hesitate to contact us by visiting our website, which is smartincubator.com. We have a live chat, and then one of our team members will get back to you as soon as possible. So thanks for watching this video, and see you on the other side.